Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. Today we're jumping back into some clips from Raoul and his recent Drinks with Raoul podcast, where he drinks and talks shit, but also gives some insights into the markets and kind of what to do. So I'm going to play a couple of those clips. TLDR, if you've been following Raoul and actually paid attention to what he said, you should be fine. But I have seen in my comments as well as on Twitter for his comments that, yeah, some people are upset because they feel like somehow this didn't play out according to plan. And again, TLDR is that just means you fucked up. You didn't actually pay attention to what he told you, which is 80% into Bitcoin, Solana, or ETH, and then 20% into other shit. And for me, it's just 80% into Bitcoin. Like, that's the main focus. All right, let's play those clips.
Let's talk about when banana. When banana comes up in every fucking tweet. When banana. And I just think, and I trolled actually Julian Vittel with this because he put something out on like when banana, because it drives me fucking insane, which was why Dai had made the t-shirt about it as well, Dai with the most likes. That whole t-shirt print was a kind of tongue-in-cheek to this. It's like, I've given you literally the chart that everybody in the world copied, the M2 chart. I've given you the long-term 90% correlation chart of global liquidity. I've given you the entire everything code framework, and it's all been playing out. We haven't really put a foot wrong. The volatility is part of the game. We've explained it. We gave you the don't fuck this up rules. And yet, went banana. And the dim-witted ninnies, who was, yes, dim-witted ninnies, that's my new term of affection for the when banana crowd. And feel free to put when banana all over Twitter now, because you can troll me, I don't mind, as long as it's done with good humor. Is the when banana is like, there's the chart of M2, that's been working, but we nailed the exact low in September with, and said, this is the low based on liquidity on our analysis that we've been working on for 30 years. Here it is. This is the start of banana zone. The Bitcoin doubles. SUI goes up 5x. SUI pulls back 50%. Bitcoin pulls back a bit, 20%. Everyone's like, where's the fucking banana? Then it goes up. Bitcoin's now pretty much back to almost all-time highs today. When banana? Well, SUI's down from all-time highs, but it's still up since then. And we've explained the correction zone. We've explained that alts are more volatile to Bitcoin. And so what normally happens is the altcoin season comes. The chart actually shows you where it's going to go. Will it be exact? No. Will it vary from that? Yes. Is it directionally right? Yes. 100%. 90% of all of the price action of Bitcoin is driven by one factor. It's the easiest fucking trade in the world. One factor, liquidity. And if you want to approximate liquidity, use global M2. If you can't even bother with global M2, just look what the dollar's doing, go back. And so, well, look at the dollar's doing today and go back in a few, like 6 months, 9 months, whatever the number is, I can't remember now because I've had a couple of drinks. But it basically tells you what's going to happen. It's macro. So it's not magic. And then within the tokens themselves, it's not that difficult. It's all about network adoption, number of active users, total value transacted, and then is the chart outperforming Bitcoin, Ethereum, Solana. And it's that. But the dim-witted ninnies, when banana, when the fucking chart is there, I'll go through the chart and say, guys, what's wrong with you? And again, I know our hopes and dreams are tied in this. It's frustrating when the market does nothing for a while, chops around, and your alts bleed. It's part of the game. Unless you're being hung, drawn, and quartered and flailed, you don't deserve to be here because that's what it takes. Honestly, it does. It's not the easiest game in the world, right? But once you get used to it, you kind of just laugh at it and just gets a bit boring. You know, SUI, which is my main bet, down 50%. I'm still up huge because of the allocation switch that I did, and it's okay. It's okay. I've been down 90% twice in bear markets. It's okay because you look at the long-term adoption curve and you try and do the right things, which is compounding in sell-offs. Buy when the market's down. If we're not near the end of the cycle, then we keep going.
And that's pretty much how I view this as well. Like I said, I've kind of adopted this framework, probably 95%. And I've shown you guys this kind of practice chart or accumulation strategy that I'm doing for Raoul, or based off of Raoul's thesis. And Yeah, like he said, like as long as you are in those, you would have seen, especially if you got in back in September, then you would have seen already almost 2x in Bitcoin. You're sitting at around 60K in September, high 50s, low 60s, and then we jumped up to 111, 112. So the win banana, is ridiculous if you actually have been paying attention and doing exactly what you're supposed to do. And if you were properly allocated, then you most likely are, like he said at the end of that clip, kind of laughing at this because and you're not getting shaken out or bothered by all of the noise, be it macro noise or political or whatever. You can just ignore it and go on about your business. So even if this portfolio, like the this one, if it was in BTC, will be up 20% solely. And right now, due to the allocation, it's pretty much at a break even. So it's gone up and down, but it's always been behind Bitcoin right now due to the fact that we're still in Bitcoin dominant cycle. So let's go to a couple other clips from here where he goes into a bit of alpha, but the TLDR is just pay attention to the framework and ignore the noise, stay humble, stack sats, don't get out over your skis. All the stuff that I've been saying now after I stopped drinking the Kool-Aid.
Trump cycle, 2017, we've been talking about this. Trump came in, the markets reacted, same fear about tariffs, same thing, the dollar went up, everything else, and the same thing happened this time around. I mean, people are people. And what happened is the dollar ripped in the back end of 2016, it ripped in the back end of 2024. The dollar ripping is a tightening of financial conditions that play through markets and the economy 3 months later, which is why we had the correction in the first quarter. We showed you all of this as part of the M2 thing. Anyway, we said it at the time, we've been tracking this before the dollar topped out and said, he's going to go for a weak dollar. They've said they want a weak dollar, and fuck me, the dollar's been weak. It's been an extraordinary weakness. Now, this is not some structural, ever-ending weakness. That'll come at some point when we change the rules of the game. Right now, cyclical weakness being pushed by Trump and Besant, and it will continue to do so. And that is an amazing tailwind for markets and risk. Bonds, everyone's like, oh my God, bond yields, every time they go up, they're going to break out, they're going to go 6%. All the drama of the macro people. It's like last time, bonds were in a range for Trump. They'll probably be in a range for Trump this time. He'll get the front end lower and the yield curve will steepen. He will force the front end lower by changing the Fed chair, etc. And so bond yields are really not a big deal for this equation. So let's not worry about that shit. That's the macro doomers on.
And that's kind of something I mentioned as well. Like, I don't know what's going to happen with the current Fed chair, but we do know that Trump is aggressively talking about replacing him, and he's shown where the rate should be. So obviously, whoever he appoints in next year will more than likely be in his favor and lower rates, even if we don't get rates lowered now. So that just means that this cycle can extend well into next year. And that could mean there's some volatility right now, and we could still drop back down into the low 100s, or I don't believe we'll go below 90 again, but we could break below 90, retest the 78 to 80 range, whatever. But hold on to your hats, because come next year, when rate cuts come in, then that's more liquidity. And like you said, 90% correlation is all about liquidity. And the biggest liquidity driver is indeed Fed interest rates. So there's been injections all over the globe, but that big catalyst that we're waiting for hasn't come in yet. And you can see it from the political side in the news and whatnot that, Trump is definitely aggressively pushing for that. And he's got the one big beautiful bill passed already. So I definitely see rate cuts coming sooner rather than later. So that means for now, you have a great opportunity and make it super easy to not fuck this up. Just stay humble, stack sats, because once Bitcoin rips, then you're gonna be like, oh, I should have bought more for lower prices.
Okay. Global M2, then, now, same. Bitcoin, then, now, same. When banana, same. Keeps showing the banana. We started in the banana in September last year. We've given the phase of the banana, but nobody listens because they want to cherry pick everything on Twitter. It's very frustrating. I'm trying to help everybody. And yes, most tokens will go up, will come into the alt season in a sec. the most copied chart on the planet. This is what you all want to see. This is not updated from today's price action. So basically, we started up ticking. So when you say when banana, it's like, how much more can I help you? We told you here that this was the low. We said here it was going to correct. We said here this was the low. We doubled up everything, all our positions, because it's the same for NASDAQ. We've got call options in Robinhood, Tesla, Coinbase. We added SUI, we added everything. And that was obviously all in Real Vision Pro. You don't sign up for that, I can't help you. We do give it all to you. But on Twitter, I try and give as much away as possible to help as many people. Here it is. Is this going to be perfect, or is it going to do this, and then this, and then this, and then this? Yes, it'll do the latter. Like it did this, almost perfect, then this wasn't perfect, and then this. Is it going up to the right? Yes. Is it likely to fall apart with a 90% correlation going on? No. So it'll be okay. Will it deviate? Will it fail over time? Yes. Will we give you other things that matter? Yes. This matters the most right now.
And that's the easiest way to play this. So if you're upset about your bag, then most likely you probably have a bunch of alts. And since we're not in alt season, like this is a perfect example. That's why I've been doing this weekly buy simulation basically to show you guys how, yeah, you can fuck this up. So these are top 100 alts, some solid gems from previous cycle. They're not like shit tokens, but this portfolio is down 40% against Bitcoin. So that means for the last 6 months, I've been sitting here holding on to this since December. The portfolio is wrecked, and that was with 2 buy the dip opportunities. So I could definitely see why some people would be upset, because there's so many other tokens you could have picked, and the likelihood of you picking something that would have outperformed Bitcoin over this last 6 months is a gamble. So if you're sitting there saying when banana zone, when alt season, when bull run, whatever, then chances are you just unfortunately fucked this up and you didn't pay attention to the framework that Raoul said. Because like I said, here the proof is in the pudding here. This is 50% Bitcoin, 30% Solana, 10% SUI. And this portfolio is breaking even. So all it needs to outperform Bitcoin is for Bitcoin dominance to drop and for these to catch a little bit of a bid. Not bad. And then just in transparency, this is now the portfolio that I'm doing on Coinbase. So you can see that I have my average cost basis for DCAing with Bitcoin is 108K. So I am basically right at the top of Bitcoin because I've been doing a DCA every day. And that started back in, I think right at the all-time high, sometime in January or something like that, 111, 100, whatever range. But I got those dips. But you can see it's 75% of my portfolio. And then Solana is 15%. So that right there is 91%. And then DOGE is another 6%. So we'll call it 5. So I'm sitting at 96% in these 3 tokens. So there's a meme token, and then here's the blue chips. So remember, Raoul's strategy is Bitcoin, Solana, and ETH. He believes Solana will outperform ETH, and he believes SUI will outperform Solana. I didn't go that far out on the risk curve, but he got into SUI super early, and saw that rise up against Solana since then. And yeah, ETH has been down, but as he mentioned, the entire financial layer will be built on top of ETH. So he believes that it will still do really, really well. So his thesis is basically get into Bitcoin if you don't want to follow anything else. ETH will outperform Bitcoin, Solana will outperform ETH, and SUI will outperform Solana. That's it. So you can decide your allocation between those 4, but for me, you can see sitting there right there at 75%. So that's my DCA. That's not my actual HODL portfolio, because that is spread across like Binance and in my Ledger and on Ravi. So, and that has alts from previous cycles. Or cycle, I should say. But once I adopted his strategy, this is my DCA strategy. It's pretty much spot on with his don't fuck this up thesis. So if you're, again, sitting there wondering when your bag will pump, then you probably need to reallocate. Cut your losses now because the chances of whatever shit tokens you got into rallying, maybe you'll hit it, but chances are you are going to miss the boat just like I did last cycle because you're holding a bunch of shit tokens. All right, that's all I got for this video. Smash that HBO special, help a brother out, like, subscribe, comment down below. And until next time, live daily and achieve your impossible. See ya.